Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab chat? Thank Okay, great. Well, good morning, everyone. Welcome to the Trader Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. In addition, this stream is based on structured trades that are available to everyone to use as a template to reverse engineer and build into a vetted structured trading plan. The Trader Lab is really what it's all about, is helping traders understand and build out the business of trading to differentiate from gambling and working with probabilities. The thing about gambling is we all win intermittently when we gamble, but gambling for most is not a sustainable business model. Casinos also sit at the table. However, they only interact with the gamblers with statistically vetted games. And those games, over a large sample size in a random environment, extract the dollars from the gamblers. So using a successful business model, our objective in Trader Lab is to build structured trades on a chassis of a successful business model. And it's up to each individual trader using structured trades, if they choose, or derivatives of them in the Bookmap Discord Trader Lab chat, to find their edge. That means what time frame or fractal do you create alignment? Where is your psychological comfort? And ultimately, how do the metrics shake out in order to determine whether or not you actually have an edge? That is the business of trading. That's the basis of the Trader Lab, and it's available to everyone, including the 60 PDFs of structured trades, a library of webinars, and a community, all at no cost, courtesy of Bookmap. And there's a lot of additional education available also to those of you. So feel free to visit the Bookmap Discord Trader Lab chat. It's a group of traders looking to build out the business. It's a serious business. If you're interested in the business of trading, there's open house for you, and there is no cost. So stop by, say hi, and remember, this is open to everyone. It doesn't matter what you do, how you do it, how you get there. We're all here together to leverage our collective experience and hopefully improve. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is based on structured trades, and these trades are available to everyone in the Bookmap Discord Trader Lab chat. And it's really up to you to determine where it fits. And again, thanks for visiting Trader Lab. Now, you guys do know yesterday was a holiday in the U.S., a federal holiday, so the markets were closed. One moment, please. The markets were closed. And so we are basing yesterday's statistics, if you will, or levels are based on the day before. So let's talk about today. Today we have a very interesting market. We started out, well, I'll show you the first trades. I started out on the short side, turned around, got on the long side, and then it got choppy. And now we are in what's called mean reversion. Mean reversion is very simply rotational trade. And the idea of mean reversion is to trade outside in. And one of the things we focus on in Trader Lab is not the ability to predict what the market's going to do, because still waiting for the magic 8 ball to come back from the factory. to tell us what's going to happen. But the business of trading is really about what might happen, where it might happen, and then acting accordingly subject to your plan. And if you don't have a trade for a specific condition, your job in TraderLab at least is to just wait. This is a business of patience, structured trades, statistical probabilities, and understanding we are in a random environment. What happens, the outcome of our trades is really not under our control. Just like the casinos have no control over the cards coming out of the deck or how gamblers play their cards. So they are in a random environment also. However, they only play games with an edge. And while psychologically or emotionally it's really hard for us to accept this randomness because of our wiring, the need to know, the need to get approval, the need to be right, maybe the need to make dollars, all that. However, casinos don't operate that way. If that is a successful business model, they operate with cost of production and overhead like all businesses do. So if you're emotionally attached to the outcome of any one single iteration or interaction with the gamblers, if you will, or the other participants, that is part of the process that you have to learn to manage. When you get myopic and focused on your feelings, you are not in control. When your self-talk is negative, you are sabotaging yourself. When your stop gets picked and then the market goes on to target, nobody was out to get you. It's just part of the random distribution. Journal your emotions, because the thing that may take you out of this business, assuming you do the work and you actually can vet and have an edge, is yourself. So it's a battle against the things you know you don't know, and ultimately the battle against yourself. These are areas that we focus on in the TraderLab, and ultimately you can have the best process on the planet, the ultimate trading program, and if you can't execute it, doesn't matter, does it? So get to work, come to TraderLab, learn about what everybody else has gone through before you. There's nothing unique or undiscovered in this business. It is all out there. What isn't out there is the business of trading is not known by most retail traders, and most retail traders think that it's just get a toolbox, plug and play. Time frames, indicators, throw enough against the wall, it's like spaghetti. Maybe some of it'll stick. By the way, we do call indicators spaghetti. Think about it. Okay, let's go. First trades. So what we noticed in the ETH was, we opened, looked like it's going to the moon, but then we started seeing selling in the ETH. That was interesting. So the market goes up to go down, and the market goes down to go up. By the way, if you have questions, please post them. Thanks, Stephen. So now we're going to look at the first trades. So the market is long. Remember, the market goes up to go down, market goes down to go up. Now, yesterday, I should say the day before yesterday, given that we couldn't sell off, and if you guys followed the stream, the day before yesterday we were closed, I was looking for the market to open and go down. Now, go down doesn't mean, fall out, because we're in a higher time frame bull market. But I was looking for what's called responsive selling, because we were going to be closed yesterday and that we would get some profit taking. We actually got some profit taking, but it was very shallow. That indicated to me, or at least suggested, that we would have a higher open today and possibly gap and go. And in the ETH, we were quite a bit higher, I think about 20 points higher early this morning, and then it started coming off. So I was seeing the continuation higher and the failure of the selling on Tuesday. But then I see the selling come in today, and I'm going, well, are we going to get that today? Well, I don't know. So I come in with, I want to get long. Is what I'm thinking for today. But maybe we already did that. So let's see who takes control. Now, that's where we are at the RTH Open. And I have no idea, because it's not my job to predict. I wish I could. I can't. So we have structured trades in the TraderLab. So this is the first structured trade. It's a short. Now, I don't know it's a short. So I want you to know, this is called the opening trade. And the opening trade is a very aggressive trade. And I always repeat this. I'm going to always repeat it. It's an aggressive trade. It's not for those who are faint of heart or don't have a statistical vetted edge. It's an advanced process because of its speed. So you really have to have your stuff together and be unconsciously competent if you're going to participate in this trade. One moment, please. Got to look at the things here. So this is called the developing volume point of control. It's the retail price. Now, right here, the market can go up. And let me give you some probabilities. Overnight mid, overnight volume point of control. These are targets, high probability targets for the upside. Then coming down, we have yesterday's high, Tuesday's high, settlement, and possibly this level here. This is called the naked volume point of control. It's the retail price. So the market has the possibility to come down, get the ETH low, statistical probability, get settlement, statistical probability, and get this. So we have this below, and we have this, and out the top above. Very exciting. So that's what I know. So those are, and they're statistically based. I'm not going to go into statistics. Those of you following the stream, I've given statistics out to them, as they say, blue in the face. But those are available to all of you. And if you're in YouTube, you can access the 60 PDFs of structured trades, a library of webinars, and those statistics if you're interested. And of course, you have to vet everything for yourself, past performance, not indicative future results. So this is the first retail price. Here's my buyers. So right here, I see buyers, I see volume. So right here, the sellers take over. So these guys now are stuck. This is my retail price. If this is too expensive and there's more volume here, that sets up a potential short. This is resistance. I label it a variable high volume node. This is just process, guys. Remember, structured trade. So variable high volume node is a previous location of retail. It's like a shopping experience. So if the shoppers think, and this is microstructure, in this microstructure that this is too high and there's more volume here, it might underline suggest this is too high. So right here, I'm looking for a short. Short, stop, watch. Now, targets, where? Part of the joy. Let's watch. This is why this is not a trade for those who are not experienced, because it's the time, it's the speed of it. So the way to get this trade sorted out potentially is to practice it, replays. And when you're trying to learn this behavior, it is about high speed. If any of you guys have ever taken a speed reading course, they start you out normal and then gradually speed it up until you're flying. And it forces you, and I, back in, I think it was either senior year of high school or maybe somewhere in college or early on, I took speed reading because there was a lot of things to read, right? Well, what would happen, they did is they had like, they would flash words up on a screen with a little block thing that would just force you to read the words. And then they speed it up. And at some point it was going so fast you really couldn't read it. But it was registering on an unconscious level because your mind was seeing it. Now, I'm not saying, but how do you get unconsciously competent? That's what speed reading is. That's what this is. So in a way, it's like speed reading because you're looking at microstructure. Just a little, what do we call that? A sidebar. So this is the short. So now we're going for targeting. Well, we got yesterday's high and we have those levels below. Remember, overnight low, settlement. These are the targets. By the way, let me give you I am going to give you the statistics. I can't help myself. We opened higher outside of yesterday's range. And now you're going to see why I was skewed to the upside coming in. The overnight volume point of control, which is above us, which I already pointed out, 79% probability. Overnight high, 76% probability. Everything was skewed to the upside. First hour's high, 68%. So I came in looking for the longs. But the context was suggesting shorts. How do you reconcile that? What is the priority of inputs? I say it's context. And the context is gap high, come down in the ETH. We are rejecting that current overnight volume point of control. So that kind of puts me on guard for the longs not having a fun time initially. So getting to the previous high or filling the gap, 63% probability. Getting to the overnight mid, so 63% to get there. Overnight mid, 62% probability. Take out the first hour's low, 55% probability. Get to the previous settle here, and it's going down, 48% probability. What are we going to do? Previous value area high, 43% probability. Everything is skewed up, and we're going down. What do you do, you're asking? I'm going to say you follow the context as your priority of inputs. And this is difficult because there's conflict. So in the TraderLab, what I try to share is the idea that context is number one. It supersedes statistics. And there's a way to kind of do this. I call it narration. It's conditional statements. And it goes something like this, and write this down. If this, then that. If not, then what? If we open and go south, so if this, and so in other words, if this, then that. So if we open and everything is bullish, we go up. If not, then what? We go down. Brilliant, right? Well, if we don't do what the conditions or statistics suggest and the condition changes, we have to change. This is very important, and it's hard. What's hard about it is the conflict that we experience as traders. That's part of the joy. Now, the casinos give you just a perspective on this. They don't experience the conflict. They just play the games. So our game adjusts. Their game is static. So our setups need to be static, but what adjusts is the context which qualifies the setups. Does that make sense? Are you guys tracking? How are we doing in the Bookmap Discord TraderLab community and YouTube? Please give a thumb up if you're visiting YouTube, by the way. By the way, we do have targets. The market in the current condition is heading lower, and we have targets below. Value area high, and this is current market. I will get there. I want you to know these. Around 57. Naked volume point of control around 54, 55-ish. Let's go back to our targets. Here. By the way, there's over a 90% probability we'll take out the first hour high or low. Looks like the first hour low on its way out. And then about a 70-ish% probability, I think. Let me just look. Actually, a 30% probability of getting here. Notice how the statistics are skewed in the exact opposite direction. So, and I'll explain why we might come back here. You might find it interesting. So, okay, first trade short, having a wonderful time. Let's keep going. I'm just managing a couple things I got going on here. Oh, I'm sorry, guys. I got to pay attention. I'm not a good multitasker, so I'm keeping an eye on things here. We got to watch 658 at the moment. So we have the current low, took out the first hour's low. This sets up a couple possibilities. The 54, 55 area, or something called mean reversion, where we come back to 65. So you got two possibilities right here. Not a recommendation. That's the current market, and I'll come back for that. So too high, short, continuing short. Right here, I see absorption. I'm on this trade, by the way. I took this trade this morning, and I believe, I don't remember, I narrated in the TraderLab. So right here, This, I'm going to label this, high volume node, is basically retail pricing. I'm not paying that. I'm leaving. I'm going to shop elsewhere. This is what the auction is about. It's a shopping experience. Hold on one second. I got to do something. Hold on, guys. I'm doing something I never do, which is trade. So that's not fair. I'm going to, let me just take care of this and leave it at that. Okay. Hold on. I'm sorry. All right. So this is our developing volume point of control. This is your retail price. This is the last retail price that was too high. So what I look at is I think of these levels, and you notice the liquidity, as resistance, and this also as resistance. But what happens with resistance? Resistance can become support. We don't know, though. So right here, going south, remember what happened here. This is how order flow can help you. Absorption. So I have my sellers in control. In fact, right here, there was resting liquidity. That's the limit order book. Sellers interacted with some of it. Down we went. By the way, the limit order book is passive. These are market orders. See the delta, and that's sellers. Sell stops. So a stop becomes a market order. Here, absorption. So the sellers are being absorbed. 171 icebergs, it looks like, went off right here. They were the passive side buying. VPOC migration, suggesting down. More iceberg buying, sell stops. Here's another little trick. I'm going down, but I'm seeing less sellers. And I'm seeing buyers. Limit. I don't know. Part of the joy of randomness. I cross above here with buyers. So what do I have? Sellers here were absorbed. Sellers here, who knows? This seller here absorbed. And either we continue down, going for overnight low and settlement, or we come back across. As soon as I cross here, this becomes support. If this is going down, it's got to clear this to continue on to targets. Let's see what it does. Comes back here. Now this is too high. I have VWAP in mid. What's it? VWAP in mid. Stops. VPOC migration. We're going to label this. What does it say? Same as what it said before, coming down, except this is saying maybe, and that's all you got, is too low. So here's the VWAP. So what I know here is the possibility is to come here. This is now maybe too low. And if this becomes too low, if we test it, then I can squeeze up. So this right here is very important behavior. So I'm going to label this. And I've got this labeled this other one. Let's watch. Now, when I'm actually trading, I do label them. And on the other side of that, if things are running around, I just look at them. So I'm just saying this, but I'm doing this for you guys in the stream so you can see a sequence or process, okay? So, and it's a way to navigate what the participants think. And part of the participant thought is based on volume because they're the ones who are transacting. And based on volume, which what auction market theory is, we're trying to figure out what's too low, what's too high. Currently, all this is too high, and maybe this is too low. So let's watch the behavior. And again, these are not trade recommendations. And we do have targets, overnight low. So we have targets, so we have to watch. Let's watch the behavior. Right here, this may twist your shorts, so just stay calm. This is a long. Now, I've got the gap here, so I'm looking, I was targeting, so I was looking for this and lower. So on the short, no bueno. So I'm okay when it crosses here. Right here, there's a problem. Let me show you. This is now retail. I break below it. Remember, sellers are here. Doesn't do it. Breaks above. So right here, I'm looking at this and I'm going, well, these guys got absorbed. They might have a problem. I don't know. Here's my buyers. Now I get my sellers coming back and I'm going, okay, break. You ever talk to the market? I have a conversation with the market all the time. Not necessarily rated G, if you know what I mean. So right here, it needs to clear. Doesn't do it. Breaks high. VPOC migration. Right here, this is support. This now, with the VPOC migration, is my resistance. So right here, if it can't get above here and it breaks below here, fine. If not, break high, mid, stops, pull back. So right here, I'm thinking, this is it. I'm going to get my sellers, right? Buyers were here. They're absorbed by the sellers. So here, don't forget, and over here, sellers were in control. So this right here might be too high. Watch. Notice the resistance. Too high. Watch. Pull back here. What do I see? So this is too high. Resistance. Liquidity in the book. Pull back here. Now right here, I'm thinking it's going to fall out. I see absorption. I have my seller trapped here. And right here, I get long. Because I have to get below here. And this also gave me a tip off. And this is too low. My stop goes under here. And now I'm looking to squeeze these guys out. And I'm thinking, okay, that's it. Overnight mid is statistic. And opening swing high is here. So I take the long. Get the overnight mid. Going for overnight VPOC. I get VPOC migration. I said, I got you now. Look what happens. Now this was interesting. So I got my overnight mid from my long. I got a nice, something nice in the hopper. I pull back to this liquidity. Volume point of control is above me. Overnight volume point of control is my next target. And I'm looking at this and I'm going, oh, that's nice. Maybe we'll target this. I mean, that's where my brain is. Now, this, I have liquidity here. This is a structured trade in TraderLab. It's called VWAP to VPOC. It is so what it is we went down, responsive selling, initiative buying, new retail price, and now we're shifting into something called mean reversion, which is outside in trading. If the mid and the VWAP are too low, this is the target, and then out the top. That's the trade. So, okay, short, long, target, overnight mid, going for the overnight volume point of control. Let me give you the statistic why I'm going for it. Neither here nor there. Almost an 80% probability. Past performance not indicative. Future result. You got to vet it. Add. Going for this. Going for the overnight volume point of control. Stopped out of the whole thing. Okay. That's it. Very exciting. Now what? Too high. I'm going to mark it. Variable high volume node. Now the brain is going, what's going on? It's not making sense, or it is making sense, but unfortunately, it makes sense only after the fact, and you have to go with what you got. So now we break down. We take this out. This was too low. Remember? Right there. So this was also too low. Right there. So this failed, right? So now we come back from the other direction. Liquidity in the book. So now I'm going, well, that was cute. VWAP in mid. So two-sided trade, break down, take out the longs, fine, back up, VWAP in mid. Now I'm looking at this and I'm going, well, this would be pretty darn aggressive, However, I now know, and I got to the overnight low. I got yesterday's high. I said, boy, did you fool me. So pull outside, and now I'm taking the other side of the trade. Now, this is a very tight trade, which may or may not be something you can do. I'm going to show you the structure. See if I can do this. I don't remember. Here, let me just try to get oriented here. This is called mean reversion. I looked at this, trying to remember what I was looking at over here. I looked at this, and it's called VWAP to VPOC. There is not enough range. I cannot take the trade. In other words, this is a structured trade with no range. So it doesn't matter to me if it goes and does whatever it does. It's not my trade. I can't take it because, and it's not, but based on the auction, this is a qualified trade. What's not qualified is the range. Okay. So as the auction behaves, it just does its thing. Here to here is a structured trade. No range, no bueno. We come out here and I come back. I got my variable high volume node. I got the open, and I'm going. And at this point, I'm clueless. I'm looking at this. I don't know. But here's some high volume, and I see a seller, and now I have volume here. So I'm looking at it, and I'm going, well, at least now I have some structure. And I'm trying to get here so I can come out the bottom. I'm trying to come out the bottom. Because now I'm thinking this, and maybe even this, but this. So this is my primary. So I'm trying to get, now I'm playing the short side only, no longs. And surprise like everybody else. That's just part of the joy. Oh, there we are. So this is the last short. This was support down here. This is where the sellers got trapped. Top of this range. Right here. So this here is where the buyers took over and the sellers got trapped. In this, there's volume. So, for example, if you took a short here, which didn't qualify, this is where the other side got absorbed. So where the buyers took over. So you'd be coming down to the top of this range for scale. And then either we break through it or we do one of these numbers, because now it's in mean reversion. This is the mean. So it's outside in, outside in. The thing about it is, what did we do? We failed the upside. So that kind of sets up our short side. Anyway, this sets this up. This is your scale. And then you're coming back. And there's another piece here I have to give you. At 9 a.m., we have something called the IB30, which is the low, which is this, which is set. So whatever the low is by 9 a.m., which would be this low, when we take it out, or if we take it out, it sets up a high probability of taking the first hour's low out. So what that does is, once I see we didn't get north, tried mightily, didn't do it, we take this out, I still have this open below me, I have a couple opportunities here. I can wait for shorts because I have a high probability of taking this out and continuing down here. So that's my trade. So for me, I don't want to get long. If I do get long, just so you know, it would set up a mean reversion. So all I would get if I got long might be to come back to the mean and maybe squeeze up. Don't know, so that would be the long. So let's talk about it. 9:30, this is the IB low. I have a high probability of taking it out. So I know that. So this didn't qualify. So the next short, I'm giving you the rationale behind all this. This next short suggests I'll take this out, which is this. And then I have statistics. I have this. So this is where I'm going. Now let's look at it. So I get my short. I'm going for this. I have this. I have this. So I take out my IB. And now I'm going for this. I'm going for this. Now there's another trade in here I got to talk about. I come out here. This is the IB continuation trade. I'm sorry, not the IB. Brain is gone. It's called, there's another trade in here, and it's called the IBF. Now there's a bit of a problem here for this trade. And if you take it, and either it mean reverts or it fails and goes here. Here's what you've got. Tuesday's retail price, it's a target, but it's a low probability, 30%-ish target, but the trend, if you will, or the context is down. It might be too low, but it's a valid target for the short. The other side of this is we have what's called the IBF, which would happen here. The IBF is a mean reversion trade, which would come back here. So you have a bit of a conundrum. So if you take the IBF, you're looking for this, and maybe the comeback up here. VWAP, mid, and squeeze. Or you take the IBF, which we're going to look at, it fails, and then we're going here. That's all I know about it. Except we're inside yesterday's range. Right here is support. If we bounce off of this and come in or get near it and come back, then it could be a long. Or we fail and we continue here. And then, I mean, that's it. You've got maybe on either side. So let's look at it. So this was absorbed, buying iceberg. So in here, you'd be looking potentially at a long. And that trade would fail. Then it sets up the possibility of a short. To there and to there. So that's the current lay of the land. Now, the IBF, here's the thing about the IBF. Are we in balance or what? Or are we returning to balance? The market, and this is something, I'm just giving you the structured trades. I think it's kind of a coin toss that whether we would come back here or not. The problem with getting long is this. That's the problem. And I certainly don't know the answer, you know. So there's a few ways you could work this. If you were short, which was the last trade coming down, you'd be scaling here ahead of this to come down, and then you're holding for this. Or when we come back inside, you're managing the trade, you might get out of your short. You might even take a long. If you don't get back here, you take a stop. That's life. You come back here, you have the potential for it to continue to here. So it's up to you. I have no opinion because I kind of let the context tell me what to do. There's no, see, the thing about randomness is we did get the rotation, you see. But right here, these buyers got absorbed. So you need to manage your trade, you know, and if the trade fails, it fails, you know. Now here, what happened? We broke below the IB. So this trade is over here. We pull back. So now this outside edge right up here is potentially too high. This sets up the short. And you can get chopped in here. You have to be very careful. But this is the target. So we'll see how this one plays out. And this is just the way it works sometimes, guys. I mean, sometimes, you know, it's very clean. And other times it's not so much. The thing about trading, at least for me, is to try to get in alignment. There is no secret sauce. It just, you try to get in alignment, and there's going to be, you know, trades work, trades don't work. Some do, some don't. There's just no way to avoid losses in trading. Look at this iceberg here. We got a 1,000 icebergs going off here. What we're seeing here is this here especially, a lot of buying here. So we need to be aware that the icebergs are buying into the sellers. That's the absorption. So we got to be very aware. We're also got to another location, value area high. Value area is where 70% of the volume took place inside Tuesday's range. The high side of that was here. The highest volume was right there. So the nature of the market is to come here as a target, and if we get through there, then it can be here. So that's kind of the lay of the land. This is the primary target for me on shorts. Doesn't have to go there, never will. I mean, that has nothing to me. It doesn't. Remember, it's about a 30% probability. But the thing is, the context is suggesting lower. That's all I can tell you. And the market's long. And then possibly here. So this is the primary target if we can get inside. If we get inside, it's here and possibly there. If we can't get inside here, then we can squeeze back up. That's what I know. I don't know anything more. And we are aware of the icebergs. So this is how an order flow tool can help you. So let's look. Market's having trouble getting under these buyers. Got easy trade. Not an easy trade, guys. When it gets like this and you start flip-flopping mentally, long, short, it's best just to stick with one side, manage the trade, let it play out. Because it's rotational, and right now we're in a consolidation. You have to be aware when you get into a consolidation what it represents. It's a two-sided trade, and you need to be thinking in multiple time frames. Currently, the higher time frame, by higher I mean intraday developing time frame, is suggesting lower. So are you going to try to pick the bottom? Not so much. We are aware of what's going on, and we have to manage our trades. That's all I can tell you. For me, I'm still going for this. If this is the low of the day, which it could be, and I don't know, then I just manage the trade. I get taken out. This could very well come right back here. So there's no way I know that. So the solution to knowing you don't know is trade management and not forgetting about that. Questions, guys? If you're in YouTube, there's a little bit of delay, but please post. I'll do my best to answer questions if you have them. Appreciate you visiting TraderLab. And if you could see me, you're doing pretty good. Duzman, hi. Thanks for the question. Duzman is in the Bookmap Discord TraderLab community chat. Thanks for visiting. Mean reversion is rotational trading. Inside out, it's actually outside in. Inside out for mean reversion. It's actually outside in. If this is the mean, and this is the mean, in other words, the mean is where the highest volume is. Now, in the intraday developing time frame, this thing moves around with the volume because trading is really a shopping experience. The whole idea of the market is to figure out what's too high, what's too low, and what's fair. We don't know where those are. But if we come outside, and this is the mean, it is an outside in trade. So let's think of it this way. There is conflict in the sense of the condition of the market. Higher time frame is up. I think we can agree. The market's been going up like a bullet train the last couple days, right? Everybody is long in the market. If we run out of buyers, then who become the sellers? The longs that are in the market. So then we want to try to turn around. So the higher time frame is up. Okay. We know that. However, we don't trade. We trade in alignment with it. However, we also need to understand the shorter term time frame, which is a fractal. So we're trading inside of it. So you could still be in an uptrend and be short. So now as today developed and the ETH developed, and it was like 20 points higher in ETH and we got selling, that kind of changes things because now the longs who are sitting in here might be on the hook. So that's where what brought in the early selling. And then once we got those early sellers in, the stops were above the opening swing high, so we took them out, you know. And we got to our overnight mid and all that, which I already narrated. Now we break back below here. So what happened was the week longs got taken out. The shorts are in this leg. We squeeze out these shorts and the buyers take over. The buyers run out of gas. The sellers take over. We're in two-sided trade. The volume point of control shifts down here. So we're off the longs. Now it's what's going on? Now it's once we come out above here, then it's outside in trading because the condition has changed. And you don't know until you know, and that's hindsight, right? But right here, it's telling you because this shifted all the way down and we rejected what's above us. This was the last retail price. This shifted up. It's off to the moon, Alice. No, we change our mind about that. The market says now we come back here. So we'd like this price. Mean reversion trading is outside in. So now we're looking for shorts to come back here. And then the other part of mean reversion is it can come back here. So right here, it can just come out and keep doing this kind of rotational trade. It's a different condition. Now, for me, I have targets below. So, and I have statistics also that suggest lower. And we can get run over, get thrown under the bus anytime. So right here, I get VPOC migration, too high. This is now a variable high volume node right there. Same process in fractal. So this is outside in, mean reversion. This right here is telling me that this price might underline be too high. There. I come under, I get absorption, I come up here. This is my resistance. Sellers, too high. Short. So you're holding a short from up here and you're just riding it out. Your support is here. So that's it. You're just sitting short this and this. So now if you took the long, that's not in alignment with the context that might have worked. That's all I can tell you because I don't know. It's not my job to know. So still a short. And this sets up, if you clear this, remember next target, this is really the primary target. Now you're going to need to be watching the behavior here because here, subject to how it behaves, and this is not a trade recommendation, in this area, if we see a long trigger, the potential is to come back here and come back here. If we keep going after this, then the potential is down to here. So let's watch what it does. TraderLab, structured trading. And by the way, the fact there's nothing mechanical. What is very difficult for most traders, I think, is to understand there's no mechanical plug and play process. It is an alignment process, and we get fooled. That's what stops are for. It's not about being right. It's about understanding how the market works and where it might behave. And that's really, really the nature of the thing. Yeah, Duzman, you're welcome. Any questions on YouTube? And guys, thanks for visiting TraderLab. This is structured trading. And the basis of structured trades is a template so you know where your trades might show up. Then it is alignment with trades that qualify. So this is our next target. There was another thing I wanted to be looking at here. This. This right here, we want to watch this behavior here. This is our next target. So if you're in the short, this is TraderLab short. If you're in it, this is your target. If you took the IBF or a long, you would take a stop. What's important to understand is context is number one. Most traders do not understand context. Well, Fred is asking me, is the volume here more significant than the volume at the lows on Tuesday? It's the next location to trade. There was another location, wasn't there? I think. Yeah, this was not tested. Actually, this is. I wonder if I got the right level on here. I believe I do. So anyway, this is our next target. Not a recommendation. Getting absorption, that's fine. Follow your plan. Now, so for me, this is the next target. Do you guys just hear something go off that said stop and there was an audio alert? Oh, you did? Great. I don't know why that was going on. So what do we have? This was the primary target. This is the next one. We take out yesterday's low. Guys, was there a naked volume point of control like right here? Can you confirm that? That we missed by a tick or something the other day? Yeah, that's what I thought. Let me see if I have it on my trading workstation here. Huh. How could that happen? Do you know what that number was? Was it 4275? $46.25. That doesn't make sense. Does anybody have the naked volume point of control from Monday? I did not have it hit. All right, I'm a bit confused on these levels. I'm going to leave that. Okay, notice the absorption here. This right here, this is a good reason to be out of this. If you know, subject to how you manage your trade. Hold on a second. Not a recommendation. It's just notice all the absorption here, guys. This is how Bookmap can help you. We were observing all these buy icebergs. Look at the sell stops. They are taking the other side. Very important that if you have a high tier tool, and this was the other piece, this is resistance. Let's see what the behavior is here. Keep an eye on that. And remember, you're seeing the absorption. The absorption. And it doesn't mean we're not going lower. It's behavior. Because I have no idea. Now, here's two pieces for you. This and that. If this is the retail price previously, which I think it is, guys, confirm this. Wasn't Tuesday's naked volume point of control right about this 53, 54? Yeah, 54 quarter, is that right? 54 half, I'll take it. All right, so this is the target coming down, okay? There's your absorption. If you pull back, it might still be too high. It's the same as pulling back to a VHVN or a VPOC. It's the same in a fractal. This is too high. So you got to observe this area for a potential test, or if it's still too high, forward. Or not forward, upward, just forward. There's really nothing below us. We can take out this low, and there's a lot of stops under this low. So this is a reasonable area, especially because we're below this. So we'll watch this one, okay? So this is too high. This is where these icebergs were all buying. They are currently under the bus right there. There's more buying here. Retracement. Under here suggests taking out yesterday's low. Let's see what it does. So sequentially, this is what, and it's called trading in fractals, at least that's what I call it. Let's look at the concept. If this is too high in the developing time frame, I'm not paying that. Yeah, are you sure? No way. Break below it. Check it here. I'm not paying that either. You should have you should have sold it over here, and definitely I'm not paying it up there. Okay, there's my sellers. Where's my buyers? Buyers are here and here. So, and here's the retail price. Where's my buyers? What about my stops? Can't get the VWAP in mid? Liquidity in the book? I'll see you later. Out of here. Pull back. Out of here. Support. Now right here, right? Chop, chop, chop. Value area high. Location. Targeting. Pull back. Now what? Iceberg buying. Break below it, pull back. You can't regain it, subject to your trade plan, and you'll notice it's aligned with the value area high from Tuesday. If you get in there, south, and if you can't get back above here, south. This sets up something called the IB continuation trade, and that's a short, and wherever. And then you're going for this, and now under here. That's what I know. And remember, it was this, 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 and then maybe this. This is important right here. You see this here? They pulled. Break, check, selling leg. Buyers in this leg. We get, and this is important right here, because this could be the end of the move right here. Rotation, nada. And what was important? This. Remember, If I can't get above that, south. Remember, if I can't get above that, south. If I can't get above that, south. Same, fractal. Does this make sense? This is trading in fractals and reading the auction. And yes, multiple time frames, and yes, it'll make your head spin until you understand it. And again, nobody can predict anything. Okay, now we're into the fuel. Now, I don't pick bottoms, not my skill. So you're either flat or you're managing a runner. That is all a function of your trade plan. Any questions, guys? And thanks for your patience. This is TraderLab. Right. Thanks, Stowe. Yeah, I got the 55. Chats get covered up here, so I got to get them back. So let's look at some other targeting. Well, first of all, we're into the stops down here. And this could just be weak hands. I'm not going to try to pick the bottom. Not my deal. So this thing could be this thing could be toast anytime. There's no levels down here until here, 55.05. That's not a recommendation. So you could be, now this might be something that you don't want to do. How about wait? The primary trade is over, which would be down. I mean, it doesn't have to be over, but it's subject to the number of contracts. For me, I trade sequentially. So if I don't have more runners, I might be done here. But this is definitely a target. If I get below here and pull back, I could put a new trade on, which would be there, and then continue on. Or I can skip this target and just trade manage, you see, and look for this, because there's stops, and be done with the trade there. Or breaks, and I'm under yesterday's low, I just am managing the trade, and I'm just using the rotations. All of this is a variable, and it's subject to your trade plan. I don't know where the low is going to be, so I can't, But here's my last trade. If I wanted to have a trade. This is a structured trade in the TraderLab. It's here. Once you break under and you pull back, that is resistance. Because what's the participant saying? See, this is the language of the market. I don't use any indicators. This is important. Break. Too high. Now, this is important. Retracement. This is a potential short. Your stop would need to be above it. This is a potential short also if it's in your trade plan. It's not in the structured trades. It is in the PDFs I shared. There's 60 PDFs of these trades. Now, in the morning, I got to tell you, it was a little annoying, especially the long that failed. That was pretty nice trade until it failed. And then it fails. You got to go, what's going on? And then if the context changes, this is what TraderLab's about. It's not that you can predict. It's attempting. Remember, this stream's about trying to get in alignment. And when the market changes, you're not going to know until the condition changes. And if you've defined the condition, then you will change your plan you'll just flip the barge around. It's like driving a tanker. They take 10 miles to make a turn, or maybe they come to a stop. But once we failed up high, then there was no more longs. And all the longs were trapped. So that's just the nature of it. Okay, let's watch now. So we don't know where the bottom of this thing's going to be. This is part of the joy. And I have no structure down below, except I know I've taken the stops out under yesterday's low. So there's going to be stops under here. So I can't pick the low. So I have nothing here. All I have now is my last short was here and trade management. and at some point you just get taken out. And if it keeps going down, you just say, I'm done with that trade. And then you have nothing to do because the market now is not in alignment with your current trade plan or your structured trades. Are you okay with that? I think it's good idea maybe to be okay with it because the gamblers, remember, just play the games. The casino only play the games that have an edge. Gamblers just play, casinos play. If the casino doesn't have an edge in this to initiate a new game, they don't make up a new game because they need something to do. They just follow a process that has an edge, which is manage the short, or they're out of the short, and that's the end of it. That's the business of trading. It's not, gee, I think this is going to go down. Let me sell it. You could just as well sell it here, and it comes here and then rotates up and squeezes the shorts right here. It could do anything. So that's it. And these are not trade recommendations. Your trade might just be short from here down to here. I don't know, Or if you jump into, and this is different, this is a different thought process. If you roll into a runner, you are not micromanaging it, like you will with triggers. You are instead, what you're going to do is go to a higher time frame and accept that you will give more MFE back to attempt to capture larger moves. It's one way to think about how to participate in a higher time frame. And by higher, I mean a fractally higher time frame. Remember, the higher time frame is up. So, but in the meantime, the developing time frame is down. So where is the low of the day? We will know in hindsight. I can't take a short here, even though this could go to zero. And structurally, I know this is important, and I know there's a low volume zone over here. This is kind of an outside edge. So we can do this. But I have nothing to do because I don't get long down. I just wait. Any questions? And by the way, if you're finding this interesting, remember in YouTube, there's a link in the bottom of YouTube. You can access the Bookmap Discord TraderLab chat and all the additional education in the Bookmap server. Large cap, small cap stocks, options, crypto, order flow with the high tier tool like Bookmap, swing trading, options, algorithmic behavior, a lot more. It's all available at no cost. Also, if you have Bookmap, remember there's the Bookmap Academy where you can get mentoring and coaching by other traders. You do bring your trades and get them analyzed and get coached. That's available at no cost if you're a Bookmap subscriber. But to visit TraderLab, you do not have to be a Bookmap subscriber, and there's no cost. It is a community. And it doesn't matter what your approach is. The idea of TraderLab is to leverage the collective experience of all traders so we all get better together. And of course, even if you don't have an order flow tool like Bookmap, you will get to see how order flow works. You might find it as you develop, depending on where you are in your development, you will probably see that, and as you see in the stream, order flow is a key component that might give you an edge over other traders. But like every tool, you've got to educate yourself and learn it. This requires education. It isn't just there's a line here and you're supposed to do something. Absolutely not. It's the behavior and the interaction of the participant. So it's another way to look at the market. And there's no indicators. Now, remember what I was saying here. I said, this thing where's the bottom? I don't know. Do I sell this? No, it's not part of my plan. Can't do it. Where's the stops? Let's go a little further. Over these swings. Do you want to join these guys? Not me. What did I see here? I saw buying. I saw sellers interact right here. They got taken out. Sellers took another shot. They're on the hook. Sellers took a shot here. They got absorbed. What does that suggest? Higher. Is it a long? No, not for me. What is it? Nothing. Trade management, maybe. But that's it. Does that make sense? $46. I'm getting a question if this is a short. I have no more shorts in this context. By the way, it could go down to zero. So for me, this could be the low of the day. I have no idea. This could be a short right up here. I have no idea. What do I know? The market is short. Higher time frame is up. Week longs have been taken out. Thanks for playing. Broker sent you a gift basket. And I don't know. So I'm done until it becomes clearer. Because I know this could be the low. Because I got the week paper up, or we used to call it paper, stops. And they're out. So I have no trade, Tony, to answer your question. There's been, as far as if I've been mean reversion, rotational trading, and I'm looking for it to break out of a consolidation, and it just rotates back up. I scale at the volume. So let's just give you an example. I'm always thinking about who's on the other side of the trade. So if I'm getting short, I know this is the mean. So right here, I'm looking to where the last rotation up was. I want to come across and I want it to do this, right? Well, we don't have any control over that. Why did it rotate here? So I have to get risk neutral. My stop is at the outside edge. I don't do anything further than that with it, because if it takes this outside edge out, that's when I'm wrong. If it doesn't come outside, then I have the outside edge. If it rotates up, or I don't get a scale and rotates up, I take a stop. When it breaks low, I'm looking for it, to do that, Well, look what it does here. It does a rotation. This I know is the mean. So if I come across, I might get taken out. If I don't come across, then I get this. This suggests to me lower. So I have two pieces here. How do I manage the trade? Well, that's something you've got to sort out, and that's a function of fractal and time frame. So what I do is I concentrate on getting risk neutral. Because then the worst that's going to happen is my broker gets a commission and I scratch my trade. That's important to me. Not that my broker gets the commission, he gets paid anyway, but that I manage my trade. Then the rest is random. So it's really what I do is I read the behavior of the participants. So I'm not mechanical in that sense. When I break away, then I know that I have the potential, at least to get here, So I'm looking at this. And then it's what happens here. Remember, I said, well, boom, or an up. If that happens, then potentially a long. And if not, then lower. Then we're looking at that. So that's what I knew. I don't know what it'll do. And I also don't know where the low of anything is. That's part of the joy of randomness. So now you're asking, what do you do about this? Well, I know this is important. And I know there's stops. That's what I know. Let's go to what I don't know. I don't know where the low of the day is going to be. So I don't know that. So now I have to think about microstructure. Remember, too high. This was the last short if you can take it. If you don't have a way you can enter this, then you can't take this trade. For me, I'm okay with it. But I'm showing you the location. And by the way, there's no walls. There's nothing, it's all random, but it's behavior. I came right under this thing and there was nothing. Where's my buyers? No, I'm seeing these guys. I'm seeing the absorption, and that makes me wary. So if I come back, then I know that this right here, if I come across, then I'm thinking long. I don't come across. Instead, I see my seller. So this is an add or no trade, and my stop is out here. Actually, right above this guy right here. So, and then you're just doing your thing. You're managing it. Now here, let's talk about the management of the trade, if you're interested in that. All I'm seeing is selling, selling. I'm seeing my buyers here. Antenna goes up, right? Antenna is up. Buyers. Icebergs are buying in here. I see my sellers. I got an iceberg here. I don't know. I'm going, I don't know. I see my buyer. Now, right here, my sellers are in control. Here, my buyers absorb. That's absorption. So the sellers are being absorbed by passive buyers. Seller, absorbed. This just puts me on alert. Seller, seller. I'm below here. These buyers are under the bus. So I'm going, okay. I see my buyers. Teeth chatter. This is resistance. And so is this. I come up here. Right here, it's, I think it's, what goes through my head? Oh, it's going to fail. Ever go through your head? Sellers. So this buyer is stuck. These buyers here are stuck. Buyers absorbing the sellers again. Sweep. Buyers. Sellers now are absorbing the buyers. The buyers now beat the sellers. Right here. Right here. This is how absorption and understanding passive and aggressive. In other words, this was aggressive. Market delta. That's telling you there's aggressors in here. This was passive. That's this. This is saying the limit size was selling into these guys, which of course they are. The thing is, do we run out of buyers and we continue down like what happened here and what happened here? See what I mean? So the opposite behavior is happening here. I get the buyers and I get the sellers. Here, I had the buyers with the sellers. Here, I've got the buyers with the passive side. Here, I had the sellers with the passive side. They got run over. The opposite is here. Can you see the change in behavior? This is how this tool can help you. Now I got the buyers with the sellers here. If these guys, if we're going lower, we should be doing this because the buyers are going to lose. No, the buyers take on these guys. Warning Will Robinson moment. So these buyers here are no longer under the bus. Right here, it looked like that's the end of them. Stop sweep or sweep. Change in behavior. No way to know. Buyer. So this right here is the last place the sellers exerted control, right in here. Break high, pull back. Sellers take another shot. Right here, you got to clear this. See? You should screenshot this and isolate it. This is order flow. It is not mechanical. What it is about is alignment and trying to stay in real time. Now, everything will fool you. Everything. Why right here would this not be a long? See? No way to know. For me, when I know this is here, I know there's stops. So I'm not going to get out of this thing if I'm holding a short, which would be from under here, until I take this out. That's just me. Not saying it's good, bad, indifferent. What are you doing? See what I'm saying? Does that make sense? So there's an if this, then that process in here. If I take out the stops under yesterday's low and I have no levels below and I come back inside, then my next target's going to be this. It's not a long. It might be, I'm out of here if you were holding that runner. That's the end of the trade. This is your next level. And then, of course, this and this. I don't know why this is doing this. Cut it out. Questions? Liz, you have Bookmap. Do you have the Global Plus? Yeah, Tulot is mentioning about journaling emotions. Guys, there's this creature in our head. It's called Hyde. You've heard of Jekyll and Hyde. Hyde is the voice that talks to you. I mean, and it's very important not to have negative self-talk, which, by the way, it's quite possible in this business. You start telling yourself you're dumb, or I was stupid, or, nobody makes money in this, or, any of that, we all have that emotion. Those are just emotional triggers. You need to journal what you feel. Here's the other part of that. If you say nobody can make money, you're talking to yourself. You take a stop. Nobody can make money in this business. You take 2 stops in a row. Tell me you're not going to be emotionally triggered. You take 2 stops, 3 stops in a row. And by the way, if that doesn't happen to you, you're not a trader. And you say, this is ridiculous. I don't know why I'm doing, all this comes out. That's not aligned with the business. Professional traders take 1, 2, 3 stops in a row, more, and they're done for the day because of risk management. And all it means is their plan and the current condition of market are not in alignment. The casinos pay the gamblers. We have to pay to play. We have to pay because the outcome is random. And you've all heard of runs, where you have you guys ever had 5, 6, 7, 8 winners in a row? Guess what? You'll also have 5, 6, 7, 8 losers in a row, because that's how this works. When you have all those winners, you think you're there. Your ego, is in the adrenaline and the endorphins. And now the voice in your head is at the opposite extreme. I really got this down, right? That's as much as a problem as telling yourself you're a moron, because you're neither. You're just human, and the market is just random. Yet you're going to be bounced around psychologically. You need to journal these things, not only, and primarily so you recognize your self-talk, and I call that Hyde, Jekyll and Hyde. Hyde's a lunatic that occupies our headspace. And the other part is to see how you change your behavior based on your self-talk. You take 2 losses in a row, your behavior may change. And most retail traders have no self-control. Because they get in the moment and they're being controlled by their emotional state and the chemicals that are released in their brain. They're not following a business plan. They lose it. Casinos don't do that. Casinos accept the random outcome, and they know by following a vetted, structured plan with discipline. They don't change the game. They don't skip the next hand. They don't do anything. The gamblers definitely walk out of the casino with suitcases of cash. That's the whole point of TraderLab, is to help you understand the business you're in. It's not right or wrong. Not how you even feel about it. It's what you do about it, and doing the work outside of trading hours, so you're only taking trades that have an edge. And yes, you take losses. There isn't a business out there that doesn't pay expenses and have overhead. Ours is losses and maybe errors and a few other things. You can correct errors or reduce them. You can't stop losses. Errors and emotional responses, you can work on that and improve. Skipping trades, moving stops, breaking quote rules, that'll take you out of the business as well as anything else. It's all random. As long as we're under here. So now I have no trade. Now you guys might think, well, yeah, I might want to trade this. Well, where? Here? Is this a short? Is this a short? Is that a short? Is this a short? Or is this a long? How about neither? Unless you have a plan for it. Now, I'm not saying you can't trade in these rotations. Not my job to say that. But if you're a developing trader, if you're able to take this down through here, down to wherever, call it here, that's okay. If you can't do that, you're going to have no business trying to do this. This is advanced. I'm not saying you can't. But if you're doing this before you can successfully do that, you're in trouble. Because now that's about FOMO and lack of self-control. That is what will take you out of the business. If you can operate with precision, you can trade anything if you understand the fractal nature of this. This could be a short here, right? Right? there with a stop there to come back to here if you understand how the market works. But this is scalpy, you know. I'm not saying you can't do it, but would you like to be able to do it? Before you can even attempt it, you got to have the broad strokes. This is almost like not quite painting by number, but what it is teaching you how to speed read and how to understand market mechanics. This is a micro trigger. There's your seller, there's your buyer stuck. There's a selling iceberg, there's buy stops. Okay? There's the trigger, this is a short, and you are using a micrometer. Can you operate in this range? If you can't, you can't do it. And the thing about it is, to operate in this range, you must execute like on a hair of a pin. Most mere mortals are going to be getting short here. Well, how can you do that if yesterday's low is here? And maybe you can get out here, and that's about it. There's no range. So maybe you can't take this short, but can you read the structure? If you can get the broad strokes down, in my opinion, you can have all of them. You can trade all of this. Or you just sit back and you don't trade any of it. That's what the TraderLab is built on. It's not about right, wrong. It's about you developing a statistical edge. If you can isolate behaviors, you can then see where an edge might show up in relation to other levels. We have levels in here, right here. This microstructure is too high, and that's too high. In here, this is an outside edge. We don't know where it is. This is part of the joy, and it's out here. Low volume area. This comes back to here. This is mean reversion in the fractal. The other side of the mean reversion is either here or here. And if we fall out of here, we can come back here. So there's all these fractal possibilities. Not to confuse you. That's not my job. We're all confused, by the way. But my job in the TraderLab is to help you understand that if you can understand how the market works, why it does what it does, and then isolate structures and behaviors, and all of this is fractal. Fractals defined are Russian dolls. Higher time frames, the big Russian doll. It's up. But what's happening inside of the big Russian doll? Today, down. How do you reconcile that? Well, it's understanding how the market works. Market goes up to go down. Where's the stops? Here. And then goes down to go up. The thing we don't know is where's down. Well, I don't know, but we got the stops here. So if this is scalping, not a recommendation. And it's all up to you. By the way, the link in the bottom of YouTube, if you're interested in visiting TraderLab, there's no cost. You can download the 60 PDFs of structured trades that I regularly review. They're a template or basis of developing a business plan. There's a library of webinars, and these streams are available exclusively to Bookmap Discord TraderLab participants. There is no cost. It is currently available, and it has been for several years at no cost. I suggest if you're interested in this process or getting a better understanding of how the market works, you might want to avail yourself of it. I don't use any indicators. This is all based on how the market works. It's not based on lagging price derivatives, something or others. Been there, done that, you know. And the TraderLab is open to everybody. Doesn't matter how you trade, what you do. Bring your ideas and, you know, be part of a community. It's not romper room. It's really about business. If you're interested in business, then TraderLab is for you. If you're just trying to, you like clicking the mouse and it's sort of like a gambling thing, then TraderLab's not for you, because that you'd be wasting your time. You'll get frustrated in TraderLab because it's about business and self-accountability. And we also hold each other accountable in a very positive way. We help each other improve. If you're interested in the business of trading, visit TraderLab. Use the link in the bottom of YouTube. And please give a thumb up if you found this interesting today, if you've got something from it. Hopefully it'll help you develop and evolve your trading into something better than what it is. Thanks again. Thumb up. And remember, TraderLab, thank you in the Bookmap Discord TraderLab chat. This stream's available exclusively for you to screenshot, review, and compare to your trading today. And every day is unique in the market. The only way we have an opportunity to succeed, in my opinion, is to only interact with the participants when we have a vetted, structured edge, just like the casinos, and leave the rest, leave the gambling for somebody else. Thumb up, please. Remember, if you're scalping, this is a short. This is your obstacle. And the high volume is down here. This is where the buyers took over. So you can do this in microstructure. Not a recommendation, but can you learn to trade in fractals and without indicators? Can you determine what happened here? If you can understand why, do you think that might be useful? Why is this a short? Something to think about, isn't it? Thanks again, guys. Thumb up on the way out. Look forward to seeing you tomorrow. And thanks for visiting the TraderLab.